Good morning, everyone. Thanks for joining us today. Welcome back to the NWR Security Tech Virtual Investor Conference. On the call today, we've got Scout Security MD, Ryan McCall. I'll pass you across in a moment to Ryan to kick off our discussion of Scout. We'll have a presentation from Ryan today, followed by an opportunity for Q&A. If you'd like to ask a question during the call, please type it into the Q&A panel in the Zoom app. So to kick things off, I'll now hand over to Scout Security MD, Ryan McCall. Go ahead, Ryan.
Awesome. Thank you, Tim. And thank you everyone who is attending today live and also those who are watching the recording. And thank you to all the other presenters that are joining us today. So I'm Ryan McCall, the CEO of Scout Security. What you're seeing here, actually, interestingly, not a stock image, is an AI generated image representing, what Wi-Fi waves in a house can look like. And I'm going to touch on that in a little bit to explain, well, really why that's relevant to Scout Security. So for those who don't know, Scout was founded as a direct-to-consumer, do-it-yourself security company similar to a SimpliSafe. In fact, about a year or two after SimpliSafe was founded. Over the years, we've pivoted to a white label security as a service platform similar to an alarm.com, but still in the DIY space. Now, our product suite is being delivered to the market via some of the largest security internet service and telecom providers in the world, and our pipeline is larger than it's ever been. It's growing every day, and our revenue is growing, and we have a number of customers, exciting ones that I'm going to talk about in a little bit, that we're planning on launching still later in this calendar year. So our model, our enterprise white label model, represents a low-cost path to scaling the business. So in the direct-to-consumer model, you spend hundreds of dollars to acquire every single customer, whereas in this enterprise model, we rely on these partners having a captive customer base and already actively marketing to new customers, which results in substantial marketing savings for Scout while growing revenue even faster than we could otherwise. Now, the trade-off is time to market. With direct-to-consumer, obviously, we've been in market for many years. It's all about pumping money into advertising to acquire those customers. But again, lots of dollars, long payback period. The enterprises, on the other hand, cost us very little to launch and get into market. However, they take a long time to court, to get under a contract, and to get to launch and then to scale. So that's the payback. Currently, Scout is also undergoing a recapitalization associated cash infusion with the business. This is designed to right-size the company, reduce the debt load on our balance sheet, and give us the necessary cash we need to launch and grow our already secured partners into the market. Also going to give us time to get new partners signed and out there and grow the advent of white label Wi-Fi sensing security here in 2024 and beyond, which again, references to the previous mentioned image, and I'm going to touch on more here in a bit. So recently partnered with Fortune 500 company Lumen. Lumen is a top 10 ISP in the United States. Now, this is going to provide a significant step change to Scout once we get Lumen actively in market. Now, Lumen has 3.5 million subscriber base. Now, that alone would represent a huge subscriber base for any customer, let alone one the size of Scout. And I'm going to talk again more on it in a couple more slides, but this could have really drastically increase our recurring revenue. Now, Lumen is not going to be using a traditional DIY security model through Scout. They're using our brand new Wi-Fi sensing security solution. Now, this solution is extensible to any other ISP carrier or white label partner globally. Now, this is directly through those or through managed Wi-Fi resellers. Combining all these together accounts for over 70 million homes around the world that we could attach to. Our newest signed partner, who I just think you heard from Dennison at Intelligent Monitoring Group, or IMB, demonstrates the extensibility of this global solution, as IMG is partnered with Scout to bring a more affordable DIY solution to Australia and New Zealand through the retail and sales channels. Now, this will be traditional DIY, hub and spoke, as well as Wi-Fi sensing security. We've already proven this model out as well, having partnered with Windstream several years ago. Windstream is a top 20 ISP here in the United States with almost 1.5 million active subscribers. Now, over the last 2 years, Windstream has sold through Scout hardware and services to generate over $500,000 in an ARR for Scout. Now, motion sense security has been a clear catalyst for our company. We're still waiting to get our first partners in market, which we'll be doing later this year with IMG and Lumen. However, since we've announced it and been marketing it, it has led to some of the largest companies in the world engaging with Scout. And this has then turned into materially growing our pipeline more than any point in our 10-year history. Just briefly, a little bit about the market. the market for DIY home security is large. It's already over $3 billion today. But GMD Research is expecting that it's going to undergo a 20% CAGR over the next few years to reach 11 billion by 2027. And also, Scout is a recognized leader in both digital home security and home IoT. Now, what this means is that we partnered with Amazon, who's an investor in the company, partnered with Google for Google Assistant, and partnered with IFT. Combining all that with all of our other integrations for other companies' IoT hardware allows for a very robust home security and home IoT solution through Scout's white label partnership. So to detail the business and how our revenue model really works. So our revenue is based on non-recurring engineering fees that we charge partners to get them into market, hardware fees where we buy and manage the hardware that we design and or white label for our partners, and our recurring monthly revenue subscription, which is the core of our business and what we want to see grow. Hardware and development revenues add a lot of top line. In fact, it turns into non-linear revenue, right? We can have a partner come in tomorrow and buy $500,000 of hardware, and that looks great. But when your gross margin on that is anywhere between 10 and 20%, it's not exactly very profitable, and it's not sustainable because it happens so periodically and is not always the most predictable. Same thing with development or recurring engineering fees. They generally happen up front and then in much smaller chunks to the lifetime of a customer, but not our focus and not how we want to grow. We want to grow through recurring monthly revenue, which turns into annual recurring revenue from our security and IoT services. Now, this is things such as 24/7 emergency services dispatch, like our partnership with IMG and using their IMS dispatch, as well as our video cloud storage and our interactive services that all add on to what we receive in a monthly recurring revenue service from our white label partner. Now, on our direct-to-consumer side of the business, which is steady, not growing, because we're not spending thousands of dollars on marketing to grow it, consumers pay either $10 or $20 a month for our services. Now, that actually does average out to just about in the middle of $15 as an average revenue per user, or ARPU. Now, this is great, and it's really high dollar ARPU per customer with high margin. And that can be added on to by adding additional cloud storage for additional cameras in a house. But again, we would have to spend thousands of dollars every month on marketing to grow this business. And it's why we pivoted away and why other companies are sinking millions a year into marketing. On the white label side, however, there is none of those costs, none whatsoever. Now, the trade-off being that our ARPU is much lower. It's closer to $5 to Scout per month per customer. So what does this mean? This means lower revenue per customer on our white label side, but huge addressable markets. Much more so than if we were just marketing, say, here in the United States for direct to consumer. Saves us huge amounts of costs, and it really increases the global TAM as well. Now, direct to consumer is faster, but takes longer to get paid back by a customer. The white label partnerships are slower, but there's no payback period. So there's a trade-off there, but it's one that we're happy to accept to have the much larger TAM and the global extensibility of our services. So I'm going to talk a little bit more about Lumen and IMG. Now, I know you heard from Dennison, and he didn't speak much about Scout directly because we're not in market yet, but we're actively working with some of their teams there to get our platform, our DIY and motion sense platforms into market in Australia and New Zealand within the coming months. So, but first, Lumen is a Fortune 500 company here in the US. Like I said, top 10 ISP, 3.5 million active subscribers, right? So here's what the thing is, and this isn't a forecast nor is it a prediction, but if we attach to only 1% of those 3.5 million subscribers over time, that equates to over $2.5 million annually in recurring revenue directly to Scout. It's massive with only a 1% attach rate to their customer base. Now, back in 2023, when we signed Lumen, they paid significant non-recurring engineering fees in the Scout to build a Wi-Fi motion sense app for them. We launched this in a pilot with some of their existing customers, which turned into over 55% of them indicated that they'd be willing to pay for this on an ongoing basis in that $10 to $20 a month price range. So currently, and it's been delayed, and I understand that, and I expect there may be questions on this, but Lumen has been going through their own financial issues, which you can probably read about yourselves, which has just delayed their budgetary approval for the additional recurring engineering fees to finalize the solution into market, as well as the initial hardware orders. But this is the next generation home security with really very minimal upfront costs, right? So what this does with this Wi-Fi motion sense security is it eliminates these barriers to entry, unlocks take rates because customers don't have to buy hundreds of dollars of hardware, and it's extensible to any ISP. Lastly, in November 2023, we signed a statement of work with Origin Wireless AI, who is one of the pioneers of Wi-Fi sensing, to jointly further develop this Lumen solution and for other partners. Now back to IMG. So we signed a master service agreement with IMG back earlier this year. I believe you may have read that announcement. We're now working on the go-to-market. We've agreed on the plan. We have weekly meetings with some of their team, and they've recently placed their first order of DIY kit hardware. We are now in the process of getting those traditional DIY kits over into the hands of ADT, working on our branding and working on getting the app and everything ready to go to launch later this year, as well as working towards getting our Wi-Fi sensing kits into retail stores in Australia, which would turn into realistically a sub $200 Australian dollar potential hardware kit that you can walk into a store, buy a box off the shelf in Bunnings, and receive 3 smart plugs with our specific Wi-Fi sensing chips and engine in there, and 1 or 2 smart cameras, come home, plug it in, and have a whole home security system. Now, there's over 9 million homes in Australia alone. But if you combine the markets in Australia and New Zealand, and looking at the current security penetration rate of less than 20%, looking at that DIY security sales are more than 50% of all security sales right now compared to traditionally installed, and that turns into a potential for IMG and Lumen, or IMG and Scout, I'm sorry. And again, this is not a forecast prediction, but a potential for greater than $11 million in recurring revenue for our 2 companies combined on an annualized basis. So I mentioned Wi-Fi sensing security a lot. I've talked about Scout, our journey, where we were, where we're going, and who these partners are. But now I think it's really important to explain to you what Wi-Fi sensing is and how it actually works. So Wi-Fi sensing measures the invisible existing Wi-Fi waves in a home, right? We're not bringing in new routers or new modems to set up new networks. So it's the existing Wi-Fi network in a house, and we measure the displacement of those waves by human and non-human motion. So how does this work? So Wi-Fi isn't a cloud, right? Wi-Fi goes from your Wi-Fi router in predictable paths to connected IoT devices, your laptop, your smart bulb, smart plugs, Scout Wi-Fi cameras. Now, when someone or something moves and disrupts this Wi-Fi wave, we can measure the location and the amount of this disruption. We can tell where it occurs in the house and if it's a person, pet, or something else moving altogether. So now, why does this actually matter? It's because it's a step change in how home security will work. Home security traditionally has been expensive. It's traditionally been required to have someone come into your house to install. And then DIY came around. Cheaper, but still, $400, $500, $600 for an entry-level kit, maybe more. And then you have to have the ability to know how to set it up yourself, right? Attention sensors, setting up a hub, better, but not great. Now, with Wi-Fi sensing, you have the existing Wi-Fi in your house. Now, we can do this in several different ways, right? Where we incorporate the Wi-Fi sensing engine to your existing router, and you need no additional equipment whatsoever. That's a $0 upfront cost. Now, even if we can't do that, depending on who your ISP is, with Wi-Fi sensing smart plugs and our Wi-Fi cameras, you're looking at, as I previously mentioned, only $200 for a whole home security solution, where there's no complicated setup. You physically plug the devices into the walls. Our very intuitive mobile application recognizes these, sets those things up, and you're off and running. Now, why Wi-Fi sensing is better than traditional motion sensing in a home? Well, fewer false positives first and foremost, because the Wi-Fi has to be disrupted. And with traditional PIR motion sensors, anything like a flash of light can set them off, and that's not the case with this. And so they're more accurate, there's fewer false positives, they're lower cost. Now, and we also tell the distinction between human and non-human motion. A traditional PIR sensor must be placed at a certain height and calibrated to a certain level, so it can only detect an animal bigger than, whatever your average dog. Now, Wi-Fi sensing can be set to whether it will or not detect those, and if it will, is it a human or is it a pet? Now, this can also be used to monitor activity without alarming an event. Do you want to know if your kid is up and walking around in the middle of the night? Do you want to know if your neighbor comes over to check on your pets? Now, this is something that Wi-Fi sensing can do that's not readily available with other security solutions. And as previously stated, we have this solution, we've created it, we've tested it, and we're soon going to be in market with it. Here's another fun AI-generated image that we've created. Now, this shows what a two-zone Wi-Fi sensing solution in your house could look like. In the front of the house, you're having one zone with these two plugs and one camera. And in the back of the house, another zone with one smart plug and a camera. And setting these up to let you know that motion is occurring in one zone or another, where in that zone, and what kind of motion that is. Now, with a kit like this, it's still going to reduce your cost compared to a traditional DIY solution by more than 75%. And if we have it integrated into your home Wi-Fi router, now it's near zero. Now, that's where our smart cameras come in, because they add the visual component that is really, in our opinion, necessary to any home security solution. So lastly, and I touched on a lot of this, but why is it important? Because of the benefits, right? So ISPs already give out these routers to their core customers. So realistically, once we integrate into those routers with the Wi-Fi sensing engine, it's eliminating hubs and other sensing devices that are barriers to entry. If you have that in there already in your house, every ISP customer that has that already integrated into their home router can have that baseline home security in one click. And then you add on our inexpensive cameras with video cloud storage to provide the visuals and also two-way audio. Our integrations with Alexa devices listen for glass break, smoke alarms, and can be utilized as other external sirens, which further reduce the costs. This is a win for everybody. Obviously, it's a win for Scout in terms of recurring revenue, but ISPs need to replace lost revenue from things like VoIP. And streaming services are great, but they're a straight, commission resale model. But for Scout, it's high margin recurring revenue they're bringing in through a sticky value-added service and security revenue. Now, on the other hand, the motion sense vendors, they're technologists. They're creating this technology, the algorithms, the AI around Wi-Fi sensing, but they're not security companies. So neither of these groups could easily replace Scout, and neither of them particularly want to. So Scout is one of the only white label DIY security offerings in the world. And today, we're the only one that is a white label security offering with Wi-Fi sensing. I'm going to wrap up here again, just touching on our recapitalization. So I mentioned before, but Scout is undergoing recapitalization. We're working towards our EGM here on July 25th to seek up to 1.57 million in capital to roll out Lumen and ING, support new Wi-Fi sensing partners and technology, and continue to manage the business. Now, what this means is that this infusion of cash is going to allow Scout to operate for 12 months on our current revenue base while we grow the business. So realistically, it should last much longer than that as we launch new partners and we grow recurring revenue. What we've also done is reduce more than 1 million annualized costs in the first half of this calendar year by taking our net burn down from over 150K USD a month to closer to 50K, and still looking at further cost reductions to right size the business. We've also taken more than 3 million odd of debt off of our balance sheet by converting that to equity through our good relationships with our debt providers. So what that means is that this revenue uplift expected before the end of the calendar year through Lumen, Windstream growth, and INB is going to help further boost our cash position and continue the growth of the business. And then the second wave of these partners that we're currently working with and negotiating with is just going to give us that time we need to launch them in a market. And with that, I'm going to wrap it up and open the floor to see if anybody has any questions.
Thanks for the presentation, Ryan. That was, very informative, and it's really evident that the opportunities there with that combination of the balance sheet restructure with the combination of revenue uplift expected. There's the scope for some real equity appreciation potential there over the next months and years. So happy to hear some questions from attendees, which is starting to come through now. So So Ryan, with Windstream kicking off e-com sales last year, Lumen beginning to do the same now, can you talk to what the initial reaction's been to what is a new product in established markets for those guys, the products that you're putting in there? And can you give us a steer on how you expect sales to perform into the back half of the calendar year for those guys?
Yeah, absolutely. So Windstream is selling through their internal e-commerce. So just for clarity's sake, it's not a site that you can access if you're not an existing Windstream subscriber. But still, what it's allowed is existing customers to be able to buy the solution without having to call into the ISP. So that's been great for take rates and for reducing some of the churn. Now, them being the partner and they're managing this themselves, right? They shift on a month-to-month basis on what kind of offering that they're going to put out there. Now we have two different packages with Windstream. One is a camera only kit and one is the full DIY kit. So, based on their marketing initiatives for the month, which one they're pushing, so which volume they'll see will shift more and more. And we're expecting that's going to shift to the full DIY kits more for the second half of this year. And being that Scout receives a higher percentage of recurring revenue from those versus the two camera kit, we're expecting that to increase that recurring, which is great. And then looking forward to a future where we launch Wi-Fi motion sense with Windstream as well. So as they finish selling through the current full DIY kit hardware they have. Now on the Lumen front, right? So when that launches, the conception will be with directly with e-commerce, right? E-commerce that should be available to anybody, not just existing Lumen customers. So what we expect to see there is going to vary depending on how much marketing activity is put into that. But my expectation is between fully available e-commerce and an extremely affordable and revolutionary Wi-Fi sensing security kit, that we should start to see extremely good take rates, which will then propel as time goes on into very high margin recurring revenue.
Excellent. Thanks, Ryan. You touched briefly on your partnership with Intelligent Monitoring Group, who we've heard from earlier today in the conference. And as we know, Australian small cap investors, we love to sort of, see products that we can look and touch and feel in our local market. Helps people to engage with the investment proposition. So to what extent should we expect Australia and the growth potential here to be a focus for Scout? And I guess more broadly, how does the company identify and assess potential growth opportunities in new markets, new regions, beyond your North American home?
Yeah, absolutely. So obviously, I'm not going to speak on behalf of Dennison of when something is going to launch, right? That's out of our hands to a point, right? We work hand in hand with his team. When they actually launch it is fully up to them once we're ready to go. However, I think you really hit on it, Tim, with that question was, we saw the Australian New Zealand market very ripe. Like obviously, as an ASX listed company, we want our products in Australia. It's just been hard without a white label partner, right? Because we don't focus on the direct to consumer business. Now we'll be able to enter this market, and we think that it's extremely ripe for the need for a very affordable DIY kit. Yes, you can buy DIY kits. Yes, you can buy Wi-Fi cameras in Australia, but an affordable DIY kit built by a company that's been doing it for 10 years and then backed and monitored by the largest security company in Australia, I think is something that is going to very much resonate, especially once we're able to get this directly into retail stores where nothing like this has been seen before, where you can buy a whole home security kit at these price points, let alone a revolutionary one like Wi-Fi sensing. Now, for the second half of your question of how do we evaluate other markets, that's a little more tricky because, every country in the world is different, obviously, and even in different regions, like in different portions of Europe. Now, and comes to fruition in terms of, market dynamics, how people behave. Some countries, people are less interested in having cameras in the houses, some more. Some countries, people are less interested in monitored security and just want an IoT platform or a home automation platform, which we provide, right? Some companies, and well, especially Europe, like again, with GDPR, much stronger personal security protections, which, in terms of data and things like that, make it more difficult, and regulations. So a lot of thought goes into it. And Scott's a small company, right? And like I said, we right-size the business based on where we are for revenue today. So we're even smaller than we were 6 months ago. So that does make it more difficult to say grow more aggressively into places like mainland Asia and Europe. But right now, with our focus on the US, Australia, and our ProSecure partner in South America, I'm very comfortable where we're at. While we do talk to some companies and are working towards partnerships with them in those other parts of the world.
Excellent. Thanks, Ryan. Well, with all those growth opportunities, and you did touch at the end of your presentation on the capital structure sort of reworking that you've undertaken to date, and you did reference that there's a fundraise opportunity open now, which is the entitlement issue or the opportunity to subscribe for the shortfall thereof. So do you want to maybe give the attendees just a little bit of an update on what that looks like, what the timeline has involved up to this point, and if investors would like to get involved and support the company, what steps they need to take and what time frame to do it on?
Yeah, absolutely, Tim, and thank you for bringing that up. So, to date, obviously we've been, in trading halt for quite some time. Now that is due to the nature of this capital raise. This capital raise is envisioned to have three portions that are all reliant on each other, and now all executed on pending shareholder approval at our EGM on July 25th. Now, those three portions of the raise were an initial placement on market, which we successfully completed back almost 2 months ago now. The consolidation of all of our convertible notes on the balance sheet, which we completed, as well as at least 50% of the secured debt that we held. And we ended up achieving more than 59% of that secured debt being converted. And then the third one was completing out a minimum raise of at least 1 million Aussie dollars. And through firm commitments, shortfall commitments, and sub underwriting, we have achieved that. So come July 25th, I fully expect that our shareholders will ratify that. And that raise beyond that can go up to 1.57 million Aussie dollars, both through, commitments between now and then, as well as those in the shortfall. We have not reached that 1.57 million yet. So there is opportunity for outside investors to come in that aren't part of the rights issue to take up portions of that. Scout is obviously the cheapest it's ever been right now with this current entitlement offer. And looking at where that is being cheaper than we were pre-seed round before we were even thinking about being a Australian listed company is really dramatic, right? Pre-seed, no revenue, and now over $1 million in annualized revenue. The value is really there, and I think the growth is really there. And we've right-sized the business, and we've fixed the balance sheet. We have the pipeline. I mean, it's astounding the companies that we're talking to and who we're trying to get across the line, and we're going to get across the line here over the next months to year. I think it's just really dramatic and something that I would hope other people see that and would like to take advantage of by joining the offering.
Excellent. So the opportunity is there. So for any investors who would like to get involved, the company's contact details are there at the bottom of the ASX announcements. They're there on the screen here. So yeah, with that, on behalf of the company, I'd really like to thank everyone for tuning in to the NWR Security Tech Conference today. Really appreciate everyone's interest in Scout. If you have a question that we didn't answer today, please reach out and management will be happy to discuss further offline. We will also make the video recording of this session available online at the NWR YouTube channel. Really looking forward to the opportunity to talk to you all again. And Ryan, I might pass across to you now for any closing comments.
Yeah, thanks so much, Tim. Really appreciate NWR giving us the opportunity to come here, and appreciate everyone who's watching this or will be watching it. And yeah, everything Tim said, love to hear from you. Love to reach out. Existing investors, new investors. We just also launched our new investor hub for more interactive engagement, and really looking forward to being more vocal with our investors here moving forward. So thank you again, and hopefully talk to some of you soon.
Excellent. Thanks, Ryan. Thanks, everyone. Chat to you again soon. Cheers.
Cheers.